week of US trading and more all-time highs for the US stock market. Good morning, I'm Michael McCarthy, CEO and market strategist at Moomoo Australia, and welcome to the Daily. Last week we saw strong performances around the globe. Although the Australian share market was fairly flattish, it did manage a modest gain of just over 0.25%, but US markets, as measured by the S&P 500 of the Nasdaq, were up 2% plus. And Hong Kong once again demonstrated its status as a high beta market with a big bounce back of 3.6% and the biggest mover of the major global indices. A very strong performance once again. Last week we saw good performances from the Magnificent Seven stocks, Apple and Amazon in particular, bouncing back. Both were up 4% last week, and that comes ahead of their earnings reports next week. And there seems to be two themes very likely to drive trading this week. One is the potential for interest rate cuts, mainly in the US, but also potentially in Australia. And the other will be the US corporate earnings reporting, because we've got the biggest reporting week coming up with 172 of the top 500 companies reporting. And we'll get a very strong flavour of the health of the US corporate sector or otherwise. But we've also got macro data. In Australia on Wednesday, we'll see CPI data, obviously very important at the moment, jobs and inflation, key drivers of central bank activity. And with the Reserve Bank of Australia meeting next week on Tuesday, an interest rate decision expected by the market to be a reduction of 25 basis points. The inflation read on Wednesday for Australia will be very important. We'll also see China manufacturing PMI. That's likely to be in focus, particularly after over the weekend the US announced that they had a trade framework in place for US-China talks at the highest level. And whether or not that will play out, the market certainly took that news optimistically. But we've got 5 US tech giants reporting this week. Google, Microsoft, Meta, they're all coming out on Wednesday. And then we'll see Apple and Amazon on Thursday morning, our time, Wednesday night in the US. Plenty of potential movement here. Overall expectations remain very positive for the Magnificent Seven stocks. It's expected that earnings will grow by about 8% over the quarter, possibly as much as 10%. And they're likely to report sizable revenue gains, according to analysts anyway. Now, let's face it, stocks that are trading on such rich valuations need to keep delivering results to maintain their share price momentum. But if they can report sales of earnings growth of 8 to 10%, it's likely the market would take that as justification, give it a tick, and we could see further gains for those stocks. Of course, any misses here could be quite costly, but given Tesla's experience where it was under initial pressure after disappointing investors but has bounced back, any selling pressure might be short-lived, even if we do see a poor result from some of these reporters. So those high valuations do make them vulnerable to pullback, something that investors should be aware of heading into this week and their announcements. And it won't just be the numbers that make the difference. There'll be a focus on the comments, and particularly with so much frothy expectations around the potential for artificial intelligence to boost bottom lines. The comments and any forward guidance these companies provide could be just as influential as the numbers they reveal. So looking at our watch list this week, one of the stocks on the list is Meta, one of our reporters. It was up 3% last week, and we'll report after the market on Wednesday night or Thursday morning, Australian East Coast time. The consensus here is that they'll do a little better than average with an earnings per share gain of 11% forecast and revenues up 22% based on strong ad sales. But of course, the focus will be any plans they unveil to spend or invest on AI. So one to look out for. Another reporter this week is SMIC in Hong Kong. Now, this is a semiconductor manufacturer. They were up 16% last week, and overall they were up more than 200%. this year. They've got a very steep rise in share price. A number of global investment houses have an overweight position, and Morgan Stanley in particular, their analyst, has doubled their price target from $40 to $80, which brings it to about the current share price. A number of analysts have a buy rating. You'll certainly see that in the community section of the Moo platform, and the stocks gains are quite spectacular. There's real momentum in this one at the moment, and its performance has been a very strong contributor to the overall positive performance of the Hang Seng Index. And the third stock on our watch list this morning is Aspen Group. It's listed here in Australia. This is a property development group. Its shares were up 7% last week, and it's up 150% over the last 8 months or so. It upgraded its guidance last week for earnings per share growth of 20%. And once again, on the Moo community in the app, you'll see that it has a buy rating with revenue estimates of around 40 million for next year. And that sort of growth could bring even further support for the share price for Aspen Group.